Hey, it's Mark, and answer some Bitcoin and altcoin questions that I've received from readers. And also, if you like the hair, it's not going to stick around for long. I've been traveling really busy, haven't gotten a haircut. I will soon. If you look at my glasses really closely, you might see the reflection of a computer screen. I'm going to be reading off some answers that I've given other people about some of the questions that they had, that they've written into me about. It's a little bit of a mashup. The questions come in different ways, and a little bit of a mashup of a few different answers that reflect what you might be wondering about, so that if it's the same questions that you have, you'll have my answer. I'm just going to read it off right here. There are 6 questions, 6 answers. First, I say things look good and then tell you not to buy, or I tell you to look out for the price to go down. Isn't that a contradiction? Meaning, saying things are good, not to buy, things are bad, let's buy, and other combinations of those things based on what my analysis is. No, it's not a contradiction. Price and opportunity are different things. They're not related. This market has seen 100 to 300% upswings in bear markets, 30 to 50% drops in bull markets, and you can see that for yourself. It has happened multiple times in both directions. I'm looking for great conditions to buy into the market. We sell only at extremes, hopefully never. The goal is to get in when there's lots of room to grow and a high ceiling for prices, not when the gas tanks are running low and prices have gone up too much, or gone too much for their gone up too much for their own good, or gone down past the point of no return. Question 2: what's the plan for buying and selling altcoins? I have a plan for Bitcoin. Do I have a plan for altcoins? At any time my plan says to buy Bitcoin, buy altcoins to your heart's content. I often raise my allocation to altcoins during these times, but I fill my original allocation to altcoins I buy. In other words, I buy my altcoins up to my target allocation, regardless of market conditions, simply because they're so volatile. The prices go up and down like crazy. The difference between a 25% upswing and a 25% downswing, it sounds like a lot. When you look at the historical volatility of altcoins, it's just part of the game. Like, I have altcoins right now, they're up 200% in a week. I have altcoins that are probably down 50% in a week, and next week, reverse it. But the point is, when there are opportunities, make the most of those opportunities. Now, immediately after I sell all of my Bitcoin, if I have to, if the market forces me to, which you'll know about if you're a premium subscriber, immediately after I sell my Bitcoin, I will sell 1/3 of my altcoins, including altcoins I staked for rewards or deposited into DeFi protocols. I'll sell half of my remaining altcoins 1 week later and then exit totally 1 week after that. All that is included in my plan. If you're a paid subscriber, you have my plan for Bitcoin's bull market. I'll include it in the description below. One sniffle, real quick. Sorry about that. Next, okay, why do I always talk about Bitcoin, not altcoins? That is not true. But yes, my content generally revolves around Bitcoin because the market always goes in whatever direction Bitcoin goes. So we only need to care about Bitcoin. That makes this market easy for people to navigate. Hopefully that makes it easy for you to navigate. More sniffles, sorry. There are 10,000 altcoins. I can't follow them all, and they're all speculative at the moment, even Ethereum. Anyway, I need to really dig into them before I can talk about them in any depth. Premium subscribers know I will cover segments of the altcoin market, for example, Ethereum or DeFi or NFTs, etc., now and then as part of my updates. Next question: why is there no discount on a 1-year subscription? I want the flexibility to change the newsletter as I go. It's only fair to give you a chance to unsubscribe at any moment, rather than keep you in a 1-year subscription you can't cancel. Substack forces me to offer an annual subscription, so I set the price equal to 12 monthly charges. You can still do a 1-year subscription for your convenience or easier record keeping. Next, why don't I use advanced metrics? I use some advanced metrics, but they're not as reliable as you think. And when I say advanced metrics, I'm talking about like entity data, inferences, extrapolations, certain types of, I don't want to say more sophisticated, not necessarily more sophisticated. In fact, they're not as reliable as you think, but they're curated in a certain way. So there's some human effort to make these things as an enhanced or more nuanced view of the market. And so the thing is, in doing that, right, the entity data, clusters, wallets, and transactions, in doing that, that makes it the data more noisy and more inferential. I just look at the actual Bitcoins moving. An entity, for example, an entity can have 16 Bitcoins in 4 wallets. It sells all the Bitcoins in one wallet, and the entity data doesn't change, even though that's selling pressure on the market. But the number of wallets of a certain size will change. Another example is extrapolations from wallet sizes, fishes versus whales, and so on. You have to be careful about your conclusions. The number of whales holding 100 or more Bitcoins has dropped consistently forever, especially over the last 5 years. So when you're using data that is based on that cohort, you have to understand that change over time and account for that, which a lot of times the raw metrics are not going to do. The number of whales holding 10 or more Bitcoins has dropped constantly since the middle of 2019. So when you depend on metrics that impute changes in one group of whales to another, you get a lot of drift in the sense that the data's significance changes over time. It takes a lot more money to get 10 Bitcoins now than it did 3 or 5 years ago, and the relative proportion of the market in the hands of whales shrinks as time goes on. That makes the metric less useful as the price goes up, and maybe even as the price goes down. There are other things about miner data. There are other things about a lot of the different, like holding data and other things that are, it's interesting, but I'll leave it to the statisticians and the experts to sift through the nuances. For my analysis, simple is best. At the end of the day, all data simply fills in one piece of a very big puzzle. I try to make the analysis easy to interpret, follow, and apply to my plan, which means the advanced metrics don't really help me. If anything, they just make the analysis more complicated. Last question. What's the best on-chain data to predict big upswings and downswings? There is none. This market is extreme in both directions. You can get 30 to 50% drops in the middle of bull markets. You can get 100 to 300% pumps over in the middle of bear markets. On-chain data fills in many important pieces of the puzzle, but it will never give you the full picture. Nothing will. You can use it to identify great opportunities, immediate risks, and understand the market dynamics. Sometimes the conditions are rife for a big upswing. Sometimes the conditions are basically demanding you stay out of the market. But the extremes can be, extreme and unpredictable. On-chain data makes sure your expectations are grounded in reality. At least the on-chain data I look at, which is more focused on the behaviors of people in the market and the movements of Bitcoin, not data models and statistical extrapolations. On-chain data is just one source of data among many. Whatever you use it for, it's only one tool along with your own experiences and feelings, things that your friends are telling you or what you're seeing on social media. The trading charts, news, technological developments, and a lot of things I don't necessarily cover. Sometimes I do, sometimes I don't. But a lot of things that only you would know. So I hope that helped. Relax and enjoy the ride.